Good morning. Welcome to Stock Market Today. It's Wednesday, August 28th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com /today. Sign up for a free email to follow along with this show. Get daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities finished lower in very quiet Tuesday's trading after giving back early gains. Financials were the largest underperformer on the day. Utilities led. Treasuries were stronger with the curve flattening. 30-year bond closed below 2% for the first time, and the 2-10 spread has inverted further. The dollar was weaker versus the yen and slightly better versus the euro. Gold finished up nearly 1%, and WTI crude settled up 2.4%. So again, your outperformers, Utes, comm services, materials, underperformers, fins, energy, and healthcare. As we get to the desk this morning, it's pretty flat. Futures up about 10 basis points, continue to trade in a listless manner, and it really is a slow summer week leading up to the Labor Day holiday here in the U.S. Asian markets were mixed overnight. European markets are trading lower. Treasuries are stronger with further curve flattening. Dollar is little changed on the euro and yen. Gold flat. WTI crude up 1.5%. Choppy trading during a slow summer week continues to be the theme, and it really hasn't been the week. It's been most of the month, right? After the initial drawdown, we've been in this consolidation support, 2,800 to 2,850. That hasn't changed. I'm sorry. I'd love to say something different, but I don't dictate what the market gives me. We just analyze it. Take it as it comes at us. Support, 2,800, 2,850. 200-day moving average is in that zone. Resistance in the area between 2,900 and 2,950. Well-defined, clear. We've been talking about it for a while. Remember, in an environment like this, choosing to do nothing could be your best option. Wait for premium setups is how we're defining it. RSI remains below 50. That remains a concern for us. Chaikin money flow is bullish, but I'm noting here we are moving lower, right? So bigger picture, series of lower highs, and then even in the near term, that fractal nature continues. So series of lower highs for Chaikin money flow does remain bullish. So indicators are middling to weakening. Market's holding in its range. You have solid support down at 2,800. I think if we break 2,800, you're looking at these lows down here from back at the end of May, early June, around 2,730 for the S&P 500. For now, leading stocks, leading industry groups, premium setups. We'll show you one a little bit later in the show. Market in a minute. What are we talking about? Markets remain in a choppy range. It's been that case for a while. Small caps are on the verge of breaking support. They've been a relative mess for a long time, but now on an absolute basis, there are some signs of concern. Sentiment remains fearful. Medical device stocks have shown relative strength. I'm going to show you the importance here of skewing to the relative strength, right? Because medical equipment services, not great, but pure devices, looking good. Futures point to a slightly higher open here today. Let's dive into the Chaikin power bars now. Still a bullish skew. I mean a bearish skew. I apologize. Still a bearish skew. Dow loses 50 basis points yesterday. One bull, 8 bears. S&P 500 down 0.5%. 63 bulls, 108 bears. NASDAQ slight outperformer. 17 bulls, 26 bears. Small caps, massive underperformer yesterday. Down 1.5%. And now, remember small caps for a while have been the one group that had a bullish ratio. And they've now skewed hard the other way. 275 bullish or very bullish stocks, 413 bearish or very bearish stocks. Bonds upticked, sending yields lower. Yield on the 10-year, 1.47%. We've been talking about it for a while, folks, that the path of least resistance for yields is lower. Anybody who's been watching this show has seen this coming. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bearish. Major markets are mixed. Let's look at our stock of the day now. This is a group that we've been featuring in our notes recently. Home builders, construction, M&I Homes, ticker symbol MHOO, closed at 35.54 yesterday, down 1.22%. Has a very bullish Chaikin power gauge rating due to very strong earnings performance, very strong price volume activity, very positive expert activity. Also has attractive financial metrics, 20 factors, Very bullish rating, strong trend, strong industry group, type of name we want to consider. Market and model are in agreement here. Very bullish rating being met by a stock that's outperforming. Persistently bullish money flow above a rising long-term trend line. We drop down the checklist. We can see everything looks good except for overbought, oversold is middle of the range and heading lower. After this gap following earnings, I want to wait for a consolidation. Overbought, oversold indicator gets into an oversold condition or close to it. Then it's a much more compelling setup. Remember I said premium setups in this market environment? This is a great looking stock. This is the type of stock we want to own. But I just don't think from a timing standpoint that the premium setup is there yet. Right? We're going to take a look at a stock a little bit later in the show where I do think the premium setup is there. That being said, this has been a leading group. I think you want to drill down on some of the home builder stocks and stocks that are in that ETF and look for ideas. Build watch lists. Right? If you're looking for something to do market-related, choppy market, right, might not necessarily be conducive to adding new positions, build watch lists. Find the names that are outperforming in the groups that are outperforming and add them to a watch list. And then when the setup becomes a little bit more premium, those are your stocks that are likely to outperform should the market stabilize and begin to move higher. Sector tracker, checking movement over the last 5 days, still very defensive at the top of the list. There's no doubt about it. The only three groups that are higher over the past 5 days are all defensive in nature. Utes, real estate, and staples. We've been pounding the table. We've been saying it for a long time. These are the groups that are outperforming. Right? They're not the groups that get all the attention in the marketplace, right? Nobody likes to talk about Utes and real estate, but that's not our concern. Our concern is identifying the leading areas of the market and then identifying the good stocks within those areas. Well, utilities, real estate, and staples qualify. Middle of the road, discretionary comms, fins, and tech. Healthcare, industrials, materials, and energy, bottom of the list. Energy just continues to be a disaster. Materials being precious metal strength being overwhelmed by some of the more cyclical names. Industrials, obviously trade-related and cyclical. Healthcare you have to drill down because managed care stocks are weighing, drug stocks are weighing, but as I said, devices, pure devices are doing well. Now, equipment services, on the other hand, not the place to be, right? Over the past 6 months, underperformed by nearly 5%, weak power bar ratio, 12 bearish or very bearish stocks, 9 bullish or very bullish stocks. Ranked number 11 of 21 subsectors, actually has moved up 2 slots over the past week. So stock selection becomes important here. The ones you want to avoid are Glaukos, GKOS, Iridium, IRTC, and Penumbra, PEN, all with very bearish Chaikin power gauge ratings. And we take a look at this ETF, you can see XHE has a neutral ETF power gauge rating, weak trend below the declining long-term trend line. Middle of the road performer, as you can see, kind of an inline performer with the S&P 500. Bullish money flow, so that's kind of encouraging. Overbought, oversold indicator, middle of the road. Doesn't really get me excited. I think what you need to do in a group like this is really isolate it. Find what's working. The pure device stocks are what's working. We're going to take a look a little bit later in the show, but this group it's okay, right? Not really outperforming, not really underperforming. It's a market perform, right? But there's better opportunities out there, and I'm going to show it to you. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Costco up 5% as their store opened in China to massive crowds. I saw some pictures on social media. It looked pretty amazing. Activision Blizzard, some early positive responses to their new World of Warcraft game sent that stock higher nearly 5%. Newmont Mining, nothing company specific on this name, but I note that gold moved higher, so Newmont moved with. Oil bounced yesterday. That sent FTI up nearly 3%. And IDXX didn't see any real news to send that stock higher by 2.75%. Smucker's SJM missed on operating profits, took the stock down 8%. Philip Morris confirming that they are in talks to reunite with Altria. That sent that stock lower by 7.75%. Humana, the managed care names were under pressure yesterday. Obviously, these are politically sensitive stocks, right? We are in election season. Back and forth around healthcare costs, going to create volatility in the managed care stocks. Humana was down. And then the distributors, we have McKesson and ABC down 5% plus. A lot of news, a lot of back and forth in and around settlements relating to opioids. Drug distributors, part of the group of stocks that have exposure there. Those stocks are lower by 5.5%-ish on the day. So let's dive into the charts now. We said that small caps were on the verge of a breakdown. You can see it, right? Below the 200-day moving average, right? Very choppy trading. We've been talking about this for a while. Notice that small caps are nowhere near their highs from last fall. Momentum can't become overbought, really skewed towards bearish ranges. And now we're testing support at that 145 level. We've been identifying 145 in our notes for a few weeks now because, we've been in this choppy range. And now we're pushing on that string. A lot of eyes are on this one. I don't like to front run breakdowns or breakouts for that matter. I'd rather have them be confirmed. A break of 145 opens the door to 130 to the downside, in my opinion. But with all eyes on it, I have to wonder if we're going to break. I think you just need to kind of keep an eye on it. On a relative basis, the trend remains a disaster, right? Clear downtrend relative to the S&P 500, trading down here near new lows, making new lows on a relative basis. We've been saying to avoid small caps, all else being equal, for a while. I think that continues to be the case. Regardless of what happens here with the absolute, I think small caps need to be an underweight in portfolios, given the relative strength of large over small, or flipped over the relative weakness of small to large. Sentiment's still skewed towards fear. Here we're looking at a 13-period moving average of the CBOE equity options put-call ratio, and you can see after ticking above that 0.75 level that tends to mark local lows in the marketplace, we've now reversed, but still skewed towards the higher end of the range. If we look at the VIX is back above 20, right? That's a sentiment closer to fear. If we look at the CNN Fear Greed Index at 16 this week, down from 23 last week, in a position of extreme fear. So as the markets are holding support, there could be a tailwind from sentiment, right? We haven't broken down yet. All the market is doing is trading in a choppy range. For all the headlines, for all the trade fears, for all the tweets, the market is still just in this range. If we focus on the data, we can see that nothing's really happening, right? If you just focus on the technicals, this week is boring. Past month has been boring. If you focus on the headlines, it seems like there's a lot of excitement. But sentiment skewed more towards fear than greed. Medical devices. Now, this is what I was talking about. Take a look at IHI, medical device ETF, pure devices, trading up here near 52-week highs above a rising 200-day moving average. RSI holding within bullish ranges. And we have a series of higher lows for the RSI indicator. So momentum is with the trend. Right? Notice how it becomes overbought. Doesn't really threaten oversold recently after this breakout through the 235 level. And more importantly, we have 52-week relative highs. So if you're looking for ideas in this market, I think you want to load up the holdings of IHI and look for the very bullish and bullish stocks that are outperforming the market with positive money flow, and look for them when they're oversold. An example of that is Zimmer Biomet, ZBH. Very bullish stock, strong trend, strong industry. Bullish stock outperforming oversold, bullish money flow above a rising long-term trend line. Solid support, solid price-based support at the $130 mark after this breakout. This is a premium setup. Contrast this with M&O, what we looked at earlier. This one's oversold with bullish money flow. Premium setup, leading stock in a leading industry group. If you like what you're hearing here, help us spread the word. I'll be back tomorrow.